The governor of the South African Reserve Bank gave his update on the Monetary Policy Committee's decisions and deliberations and told us that there would be no increase in the repo rate. But there was a bit of detail about some of the discussions and what it potentially means for the future, including his consultation of his machine. What does it mean then? Okay, in the studio, I have Isaah Mhlanga, he's Executive Chief Economist at Alexander Forbes. Thank you, sir, for coming in. Tsitsi Hatendi-Matika, Head of Retail Investment Specialist at Absa Wealth and Investment. Ma'am, thank you. And Tertia Jacobs, Treasury Economist at Investec Corporate and Institutional Banking. Thank you, Tertia. So let me start, I think, by asking for what you guys considered to be the most important announcements by the governor when he came before the press. We know that no change was expected by every single economist who was consulted by Bloomberg, and I think on the Reuters as well, it was the same thing. But he did say things here. Let me go from here and move up. What surprised you? What did you note?
So I don't want to steal everyone else's thunder, so I'll just pick a few key things. So the split of the vote being 3 to hold and 2 to cut. So this is the first time we've seen a possibility of a cut in a while. That's quite significant. And then the second thing was that the QPM model that you just mentioned is now also putting in a cut, and that's for Q1 2020. So those are the two things that were quite important in this announcement.
Okay. Isaah, what would you add?
I think for me it's the tendency sometimes for many of us analysts to think monetary policy can solve growth problems.
Yeah.
And the SARB has always emphasized that the economy is weak not because of monetary policy, it's because of structural issues, and we had that come through in the statement, which is quite key.
Yeah.
Yeah.
But also, if you agree with the points that she's raising, I want you to say so, because then we get the kind of consensus that we're trying to build, right? Okay. Tisha?
No, I agree with Tsitsi. It was basically, especially from the market's perspective, we were watching the tone and obviously whether there could be a swing in the bias of the MPC members.
Yeah.
And I think talking to that as well is what makes the, the MPC more comfortable to become more biased towards a rate cut. And I think that is obviously the medium-term trajectory of inflation, if it could become more sustainable around about the 4.5%.
Yeah. So let's focus on this number. I think all of you are pointing to this thing that there were two members of the Monetary Policy Committee who said, can we cut? They asked the question. Do we know where the governor stands in that? No.
No, we don't.
But we would expect you to have been amongst the holds.
Yeah, I would think he would be
You'd be amongst the holds. Okay. Now, when you look, so what I did was, before I came in here, I said I wanted to recreate a situation that happens in the Republic of Normal. Don't call this country anything. Let's just call it the Republic. What do you have in this Republic? You've got growth slowing down. Perhaps no growth according to some economists. I don't know if you guys here sitting here agree with that. You have also at the same time slowing inflation, sitting very comfortably, snugly, if I may say so, at the midpoint of the range that the governor is mandated to keep. And at the same time, though, you've got external factors that may throw the whole thing upside down. You are in that Republic. What would you do? Would you cut, Tertia? Or you would hold out and hope that the things that you can't control will fall in your favor?
Hope that it will fall in your favor. I think, to answer your point, what I would have done is basically sit on the hands as well, because the external environment that you described obviously speaks to the uncertainty about the rand, because the rand continues to be driven to a large extent by external factors. And I think then Isaah's point becomes very important. What do you do? Because what's keeping our growth back? There's no external factors that can drive growth. So monetary policy in itself is not going to do it. So I think under these circumstances, it's best, like Jill Marcus said, sometimes when you decide not to do anything, it's also a decision.
Doing something. Isaah?
Keep rates unchanged. I think by and large, if you had to cut rates, you would have to cut them by more than 1 percentage points for you to actually stimulate growth.
Yeah.
And the cost to actually reversing the gains of pushing inflation expectations toward the 4.5% will be much larger, because you will require to raise interest rates quite aggressively to reverse the inflation expectations if they move up. So I think over the long term, that will be a cost to the economy, much more than the benefit that you get over the short term. But I think problems in the economy are structural. We need to just address the structural issues. The monetary policy is by and large still quite accommodative at this point in time.
That's maybe economic speak for, is the politicians' fault, damn it.
I agree with the panelists. And I think another big point that one should also think about, if you look at the bond market, how it responded. While the currency weakened a little bit, maybe by about a few cents.
Beyond 1450.
Exactly. We did see the bond market strengthening. So it gives you the indication that the bond market is finding that favorable, and this was a good thing, right? And should you start cutting rates, it reduces the interest rate differential, and it starts making it more expensive for South Africa to borrow. And one of our biggest problems right now is our debt and servicing that debt. So you'd start fueling that fiscal issue as the monetary policy, which is what they're trying to avoid the most. And I think in the Republic, that would be the right choice to
the
make.
Republic.
I think if we can add to that, we still have a risk of a Moodys downgrading, because that is not yet out of the woods.
It's hanging above our heads.
Exactly, it's hanging above our heads. If government fails to deal with the ESCOM debt, it may become a bigger risk to the fiscus, and therefore we may see a credit rating downgrade. But that is not a baseline view that we have. It's a risk that if you see this risk plus the trade wars that are taking place between the US and China, it's also a risk that can start a risk of trade from emerging markets. So while you see all those risks, in addition to energy prices that are going to kick in July, when municipalities hike those electricity tariffs, that is going to put upside pressure on inflation. So yes, we have seen inflation come down slightly, but the risks ahead can be on the upside.
But as I have faith, you must trust in Cyril. Cyril is going to fix ESCOM. You are the economist here, and I want to stick with you for a little bit longer and ask you the question, and I've been trying to find out from you guys who do this for a living. What is the risk of stagflation in South Africa at the moment as we stand? We talked about those external factors. We've talked about the internal factors. And also, you guys keep mentioning the fact that there is no demand push inflationary pressures inside this economy. Are we not headed for that?
I don't think we are there yet. It's still a little bit far from where we are. And I think the big problem is that we're not creating enough jobs. If the investment drives work, which I believe it will, we are going to see jobs being created, and therefore that is going to stimulate the demand side of the economy, and with inflation that is going to come with it.
Sure. You guys didn't mention, do you want to add something to it?
No, just two things, I think, in terms of the risk to stagflation, because what we're seeing in South Africa at the moment is, especially in the food sector, is that companies find it very difficult to pass on high input prices, right? Because then there's a risk of them losing market share. And I think, secondly, that speaks to the weak demand side and the inability of the economy to really grow jobs, is that with company profits under pressure, the nominal or the remuneration increases this year is going to be at a slower rate than compared to last year. So, that in a way is also a contributory factor to try and contain cost push pressures from a company side.
Absolutely.
But obviously it's got implications for spending.
The other thing I wanted to pick up on as well is the governor's reduction of his growth focus for 2019. I think he's now sitting at what? He's now sitting at 1% from 1.3%. It does look like it's a large revision, isn't it?
It is a large revision, but I think it's understandable. It's understandable.
Where is yours?
Mine is still at 1.2%. I mean, 20 basis points, really no difference. So it ranges some at about 0.9%. Some are still at 1.4%. So anything that is between.
I actually wanted to do a little straw poll, if you like. If I can ask the house view here, where are you guys sitting?
1.3, but with the downward revisions coming.
When are you doing it?
So we just revised our Q1 numbers. So we've got minus 2.2% for Q1. And that will definitely impact the overall
rest of
for
the
the
year.
year.
Tertia?
We had 1.1% working in April, ICIB's forecast, and I think we're working with a contraction in first quarter of possibly about 1.5%. So that could shave off, easily about 0.4, 0.5% to the annual growth rate. So possibly 0.7% if all else remains unchanged for the rest of the year.
What's your first quarter number?
First quarter number minus 1.6%.
Goodness me.
So we're the worst.
Absolutely the most pessimistic. So you were explaining the magnitude of that revision.
Yeah, I think it's understandable. If you look at unemployment numbers that already came out for first quarter, increased to 27.6%, which means the consumer sector, which was expected to add to growth, will unlikely add to growth this year. So that is one part. But the impact of Eskom's load shedding also played a role in terms of limiting the growth of the mining sector, the manufacturing sector. So that is still playing out in the numbers, and we just have to see.
I hope Eskom doesn't come back, right?
I think also what was striking for me is that S&P has 1.6%, and they're coming out tomorrow with their outlook. So it'll be interesting to see if they also revise their numbers. And the GDP was the main thing they kept saying in April. That's the only catalyst right now that will give us an upgrade. So
it's dark out there. It's dark out there. In the meantime, Cyril is busy meeting these guys. They must be coming into his office, and he's trying to say, "Oh, no, have you cleared that cloud, etc." Anyway, we'll talk about that and who we want in the finance ministry. Tertia, I wanted to talk about that machine. So for the first time, I think this year, right, it is indicating a potential for a cut. When did you say? In 2021?
2020.
Next year, first quarter 2020.
Next year, first quarter 2020. So if that machine is indicating that, is that a nailed-on decision that will get that cut, or
no?
We can just hang on to that hope that at least it's indicating something.
Yes, I think the governor has often stressed, that the QPM model provides guidance. The decisions are subjectively made by the committee. But I think what's very important and why that QPM is now, switched from a plus 25 next year to a minus 25 basis points obviously has to do with the trajectory of inflation. Because what the Reserve Bank looks at is obviously the neutral rate of interest, the real interest rate. And because inflation, has surprised to the downside over the past few months, that has pulled down the inflation trajectory. So there's still a gradual rise, probably to about 5.4%. Around there in the first quarter, but thereafter it could again sort of come back to about 4.7. Obviously, what happens, to a lot of other variables. But I think that has obviously helped to widen the real rate somewhat, which has allowed the QPM now to become biased towards a rate cut.
Anyone wants to add anything to that?
I think the other bigger contributor is that the US Fed has turned in terms of their interest rate cycle. The ECB as well has pushed out the expected increase in interest rate. So that plays in how the dollar is expected to behave over the next couple of months. So that naturally should sway the performance of the rand as far as the implied path is concerned, such that pass-through are going to be limited.
When you look at the risks to the growth picture that we're talking about here, and obviously those risks apply to the inflation outlook as well, what are the big ones that we should be worried about here? I mean, we spoke about, she spoke about the rand, you have just talked about now the Fed now, but what else should the governor be worried about that potentially could change this whole picture that we're talking about to potentially growth? Eskom. And
it's the governor mentioned
you don't trust Cyril.
No, it's not about Cyril. This is a long game. This is not a short-term solution that they can come up with. And the governor did mention that electricity prices will be an issue going forward. Obviously, in July, we start seeing that coming through. But more importantly for the economy, do the lights stay on? And I think that's the biggest question. If they manage to keep the lights on, it definitely makes a difference. But if that doesn't happen, that could change the whole picture and revise all our outlooks.
I would say Eskom currently seems to be able to provide enough energy because capacity utilization is low. If SA Corporates was operating at full capacity, Eskom will not be able to meet the energy requirements. So you could
conundrum,
say,
isn't it?
exactly, so you could say the weak growth is almost a blessing in disguise to Eskom because it appears to be meeting the energy demands. We're going into winter now, which means energy requirements are going to be much larger. And if you also see this investment drive working, we are also going to see capacity utilization increasing, which means there's going to be even more demand for electricity. And we're going to see
on aging infrastructure. What about Donald Trump and the Chinese and us?
You know, so we are sitting on the tail's end, right? So when the dragon and the Trump, what is he, a bull?
The eagle.
Yes, sort of shakes the dragon, we're going up and down. So I think, you know, what's the driving factors? And I think very interesting, some of it is what, you know, where Trump is the rhetoric. Obviously, it's got to do with his own domestic political agenda, that he can't achieve what he sort of wanted to when he was elected president. And he's willing to trade the US economy and his own re-election with the rest of the world. That's number one. Number two, obviously, the trade issue is a very long-standing dynamic. I think it goes beyond pure trade. So, but where we're standing right now is that because global growth has lost momentum, it's creating uncertainty, or the uncertainty about global trade is creating more uncertainty. And for South Africa, you know, and it comes back to what will be our growth drivers. Because at the moment, you know, it's very unlikely that we're going to get a strong external-led kind of trade pull ahead. So I think that is where we are now, very much wait and see. When you look at the rand, obviously commodities is a very important driver, and then on the other side, on the financial side, equity market performance are quite important as well. So, you know, we are always caught, you know, between emerging markets and developed markets.
I think we've exhausted this one. Anyone wants to add anything?
I just want to add that I recently watched a fascinating thing about this war, and that it's actually becoming a tech war because China is leading the drive towards 5G.
Have you been listening to CNBC Africa? I have been calling it the tech war.
It is a tech war. So there was a calculation to say whoever wins the 5G battle, whoever comes first with it, could add 500 billion to their GDP. And apparently China is ahead of the US in the story. So breaking down those walls and containing China is actually a good strategy for Trump.
Absolutely, and it's going to be damaging to us. So let's move the discussion a little bit out of where you guys are more comfortable to where you are slightly less comfortable. And my question is, who should be the finance minister that Cyril Ramaphosa goes out for? Understand my question? Who should be that guy? What kind of a guy should that be? Not who is likely to put in. What does South Africa need in terms of a finance minister, given this picture that we've painted here?
I think for me, in period of transition, you need some continuity. If you look where we're coming from.
You mean between the farm, whiskey, and the National Treasury in Pretoria?
We come from a period where finance ministers have been chopped and changed to where we are now. You need someone that is credible, that is known in the market by investors, but you also need someone that is political clout to be able to tell his comrades in the ANC to say, if we need to sell the SAA because it's unprofitable, let's sell it. So that is a kind of person that you need at the finance minister, because it's not just a technocratic position, it's also a political position. It requires the ability to talk to different departments that form the economic cluster and be able to pursue it from a political point of view.
It sounds to me like you've been watching events that have been taking place in Zimbabwe. There you got Professor Mthuli Ncube, guys studied microeconomics, and all those are complicated models, and he is struggling to get that economy going. You want to come in?
So I'll rephrase your question a little bit. You said, who's the guy? I'm going to say
that the
guy or the lady. But further to that, more importantly, I think we need to move away from the steady pair of hands, which is what everyone was worried about. So we still need a person who can caretake and do a good job, but we also need a person who can move into action mode.
We need a maverick.
So we definitely need to shake this thing up, because if we keep going the way we're going, I think we keep getting disappointed after every budget. And what happens in between also reflects in those budgets. For
I
me,
can see Isaah champing at the bit. You come in. Let's get Tertia's side here.
Can I just add something else?
Please.
And I think what's going to be very important is this whole economic cluster. So obviously what will happen at the DTI, growth and development, public enterprises, as well as national treasury. So that's going to be the key focus points for us.
Absolutely. Very quickly.
I think for me, a treasury, you don't need a maverick.
No.
Someone that is going to wreck our debt sky high from where they are. Where you need a new way of thinking and a new way of doing things is a DTI, where the actual economic reforms that has to do with industrial policy are required. At Treasury, we know what treasuries do, and the options are quite limited given our fiscal position currently.
But Isaah, we're going to have this discussion because I was going to say to you, you're wrong. What about what we have in the United States? Look at what that maverick is doing. That huge economy, $20 trillion, 3% growth.
Being a maverick is not debt only. He could strategically change things up. So this is not about skyrocketing debt. This is about changing things internally.
And what do you call
making it function, making it work.
We agree. Treasury has been quite successful by and large. If you want to compare South Africa to the likes of US, I think it's misplaced because the US has a reserve currency. They can borrow as much as they want because they finance it using their own reserve currency, which we hold, by the way. And there's no one else outside of South Africa that holds rents.
Now you're confusing me with your clever speak. Let's leave it there. Isaah Mhlanga, Executive Chief Economist at Alexander Forbes Investments. Thank you. Tsitsi Hatendi-Matika, Head Retail Investment Specialist at Absa Wealth and Investment. Thank you very much. Tertia, Treasury Economist at Investec, Corporate and Institutional Banking. Thank you.